All right. Hey, Bunker Labs. So we are here for an Equip town hall today for All In. Of course, we are all in for you. I will be dropping links to our resource page as well as we are going through this. I would like to welcome SBA District Director Robert Steiner, as well as, of course, the founder of Bunker Labs, Todd Connor, to lead this conversation. Welcome to you both.
Awesome. Thanks, Liz, for pulling us together. Bo, thank you so much for joining us. I know you're slammed, a lot going on in the SBA world, but thanks for taking some time out today to be with us.
Absolutely. Happy to be here. Thank you for having me. Yeah, this is awesome.
So we'll dive in, but Bo Steiner, as Liz said, is the Illinois District Director, so who runs the SBA for Illinois, and we bring him on the show today sort of just as an expert around what's going on with the SBA. He's also a Navy veteran, and you can see some of the artifacts in the background there. But you flew SH-60 Bravos, right? Is that
Foxtrots in hotels? Yeah,
Foxtrots in hotels. Okay,
yeah.
Perfect. So that all seems a world away for both of us, but let's get into what's going on in the small business community today. Really want to understand the CARES Act. This is the $2 trillion stimulus package that has been passed, and I believe today is the first day that people can apply for loans. But can you just an overview of like what is this thing, the who, what, where, when, why, and then I also just want to invite folks that are watching this online. If you have questions, put them in the give them to Liz or put them in the chat function, and we'll tee those up as well.
Yeah. So CARES Act signed last Friday by the president. Had significant components to it that related to small business. One was the Payroll Protection Act, program, which is going live today. Huge program I'll talk about in a second. It also provided for the Economic Injury Disaster Loan Advance, which means if you apply for an economic injury disaster loan through SBA, then you can receive up to $10,000, which is basically a small business grant to get those and get that money within like 3 days. So that's one component. And then the third piece of the CARES that was of the big pieces, I'd say, is if you have a SBA loan, like a 7A loan, the legislation put in place that SBA would pay your principal and interest for 6 months to give you some breathing room during the time that we're really impacted by the COVID-19 right now. So those were the big three things. Probably the biggest interest right now for sure is the payroll protection program or paycheck protection program. And really that's what it is to help small businesses and nonprofits keep their employees employed, keep the benefits going, and help the business pay for those costs. It's done as a loan through a lender, not the SBA, but like a commercial lender guaranteed by the SBA. But the key component is if you receive the loan and you spend more than 75% of the proceeds on payroll and benefits and basically your overall compensation costs, that loan can be forgiven up to 100%. So it's a huge impact, right? To be able to keep people employed, but then, having the cost impact on the business not hit your balance sheet and your overall. So yeah, it's a big deal.
So it's a big deal. So let's get into some kind of technical definitions. So 75% of the money that is given has to be allocated towards payroll or related payroll.
Yeah.
Is that right? Okay. So how? Yeah.
Yeah. So if you had, let's say that you had $100,000 loan you received, if you pay at least 75,000 of that towards payroll, and you keep basically consistent levels of employment, so full-time equivalents, then even if you spent 25% of it on your rent or utilities, stuff like that, you can still get forgiven the entire 100% of that loan.
Okay. Is there a time horizon by which, like, what are the cut points around the timing of this? So if for example, if I'm let's just make up a scenario. If I'm a 10-person company and I need $30,000 over the next 2 months to kind of make payroll. Presumably I get the $100,000. I keep folks on payroll up beyond the 75% or threshold. And then the loan is forgiven.
Yeah, I say generally speaking. So the way the loan amount is calculated is looking back 12 months at your total payroll expenses. So that's compensation, that's benefits, state and local taxes that you pay around payroll. There's a couple other things that are thrown in there. It's all in the rules as written, but basically saying, okay, this is my last 12 months of payroll costs, divided by 12, multiplied by 2.5, and that's the loan amount.
Okay.
So the idea is it's covering basically 2.5 months worth of those payroll costs.
Okay. Is there a future state guarantee for employment? So in other words, beyond the 2.5 months, if I were to lay off staff or things like that, is there a kind of a clawback clause, or what's the duration of expected retention for employment? Is it just over the duration of the loan period?
So yeah, so it's basically periodically, after the disbursement of the funds, the lender will go to have the loans basically forgiven, which means that the federal government then will pay that loan off with the banker. So that's going to be after the 2.5 months for sure. But the specific mechanics of the forgiveness process are still being worked on. But my understanding is that, it's basically for this 2.5 month period once dispersed is what you're really looking at.
Are there, who are the banks that will facilitate this? Because obviously SBA itself isn't a direct lender. So if folks want to go and get the process, how do they do that?
So we've really cast the net wide, but initially SBA 7A lenders are eligible. Other federally approved lenders are eligible, but other financial institutions that maybe haven't been conventionally small business lenders, or maybe are small business lenders but non-depository, can also apply to participate in the program. So if you want to, what I usually recommend and what I think is good practice is to go to your banker, your business banker that you have in place already. They know you. With all the volume, I think they're going to have to figure out how to prioritize their processing as well. So, going to your lender of record. If you don't have a lender of record or they're not supporting the program, then you can go on SBA's website and you can actually search for a PPP lender, and it'll point you to folks that are close.
Okay. Yeah, but my understanding, this is true of my bank, is that that they're really kind of focused on current customers, just given the volume of interest in the program. Okay, who should pursue something like who should be seeking the PPP and who, in your view, should not? So if folks are watching, help us give us a mental model for who should spend their time investing in this and who should not.
So I think the process for applying for the loan is pretty slim. It's not a credit-based decision, it's a payroll-based decision. But what the borrower has to assert is basically that they have experienced or expect to experience some kind of adverse impact due to COVID-19. And so I guess my thing is like, look, if your business is thriving, even given this circumstance, then it might not be the best program for you because, and if you don't anticipate it to have an adverse impact, you might have a hard time asserting that you're experiencing impact due to COVID-19. Whereas, a lot of other businesses, think about specifically the hospitality, the restaurant industry, right? With shelter in place, they can't even serve their customers in a normal fashion. Those are, I think, some of the kinds of businesses that this program is really focused towards. But ultimately, any business that looks like they might have to lay off employees, cut employees' hours back due to COVID-19, they can make a case that, hey, this is why I need it. And, it's really, I want to keep my employees, take care of them, make sure that they can stay on payroll and they can put food on the table, really, is what it boils down to.
Mm-hmm. So for companies that have like a higher operating cost, so they're spending most of their money on facilities or equipment, things like that, the expectation is that this loan can't be used for those other operating costs. It has to be focused on payroll and personnel. Is that right?
So it can be used for utilities, leases. If you own a building, like a commercial building, the mortgage on that property, those kinds of expenses are approved. It's not intended to be something where you take it and then you refinance another loan that you have. But that, I think the whole idea is that this is focused on that payroll component. For other uses that you think you might have, that's more where the economic injury disaster loan that's already in place might be more appropriate. That's a working capital line up to $2 million that is specifically intended for all those kinds of normal operating costs, you can include payroll in that, fixed debt, but all the other things that you need to do to keep the lights on.
Okay. So, and does anything preclude people from applying for both tell us against the economic disaster recovery?
Economic injury disaster loan. And that's the one that you apply for through the SBA. Mm-hmm. And then the other one is the PPP, the Paycheck Protection Program. And that's where you go to a lender, a third-party lender to actually perform to go through the lending process. Okay. So your question was, can you do both of them? Yeah. My understanding right now is that you can. It's just that you can't duplicate the use of proceeds. So if you applied for and received an economic injury disaster loan and you use those funds on payroll, then if you were to receive a PPP loan, you would basically have to use that loan to refinance the economic injury disaster loan. So a portion of those funds that you were able to get as part of the PPP program, you would have to refinance the economic injury disaster loan out of that. So you can't, I guess bottom line is you can't use the money from both on the same thing. So if you could use, you could do working capital stuff from the standpoint of the economic injury disaster loan and payroll from the PPP, and you'd be okay, is what we understand right now.
Okay. What's the accounting advice for a small business owner? Because I guess I'm sort of envisioning, if you're a company with 400 employees, you probably have more sophistication around how to sort of manage the accounting for something like this. But if you're like a 6-person shop,
right.
I imagine that there's just a little bit of accounting sophistication because in a sense, for most small business owners, it's just like money comes in, money goes out,
right.
Hopefully there's some version of QuickBooks, but
right.
For folks that are like, I want to pursue this, but I don't want to get in trouble. What are sort of the accounting needs that they need to think about it, particularly if they're, kind of commingling payroll costs with overhead costs and things like that?
Right. Yeah, I think what you want to be sure is that whatever your report, whatever documentation you're providing to your banker as you go through the lending process for the PPP program, it ought to be the same thing that you're sharing with the IRS and other reporting agencies, right? So, how I would look at it if I was a business owner, I'd look at, okay, what were my W-2s for last year? What were my 1099 contractor expenses for last year? What were those benefits? If I provide medical or other benefits, vacation benefits, what were the costs of those? Those are the kinds of things that you just need to be able to pull together and document as part of the process. So whether that means, to your example, pulling the data from QuickBooks, that's one resource. or if it's, digging in the shoebox and pulling out the receipts from the various things that you had to pay for that are payroll related. Basically the rules give wide latitude to the bank on what documentation's provided, but I'm sure that the banks are going to want to make sure, and they'll work with you to make sure that they've got everything they feel they need, because they need to feel comfortable with it too.
Right. So, I mean, the punchline is really just work closely with your business banker, which is hopefully a relationship that you've already established by now. If not, you can go direct to the SBA. We have, and Liz can share this in the comment block, but we have a whole resource hub set up on bunkerlabs.org/all_in or all-in. So bunkerlabs.org/all-in. And there's specific links there for how to apply for these programs, more definitions of what Bo is sharing here. So I just want folks to know that that's out there. We're going to talk about 1099s in a minute, because I think that's a big topic for a lot of folks. But before we kind of move into that, just some technical definitions and some things I think I'll just offer, and Bo, tell me if this is correct. But you have to get the PPP, which is the payroll protection loan, forgivable loan, you have to have been in business on February 15th, 2020. 501c3 nonprofit organizations, 501c19 veteran organizations, which I think are membership-based, dues-based organizations, or tribal business concerns described that have fewer than 500 employees are also eligible. That's correct?
Everything, I know everything except for the travel organization. I'd have to look that up.
Okay.
But otherwise, yeah, you hit it on the head.
And so for a 501c3 organization where revenue is donation based, is it again, just like a look back over the last tax filing period to say, this is what we would have forecasted for revenue over these next 2.5 months, or how are we making that calculation about payroll continuity? How do you compare revenue for a not-for-profit, I guess?
So really, revenue isn't a component of it. It's really just your payroll costs. That's all they're looking at for the purposes of this program. So as a nonprofit or a small business, what you're producing is just your payroll, your overall payroll expenses. And that's what they're using to evaluate your eligibility for the program, and your the loan amount. Okay. So there's not a revenue component to that process.
Okay, got it. So, and I'm going to ask dumb questions because I'm not a sophisticated finance guy.
We're learning this stuff right now. This is brand new.
Right. So revenue isn't considered in the eligibility process. It's just about payroll for determining the loan amount. But the forgiveness piece of that is driven by, like, you have to prove that there was a reduction in revenue. Otherwise, the loan's not free, right? Or talk to us about that.
No. So basically, you as the, president of your company or the CEO of the nonprofit, you're asserting that you would be suffering adverse impact. So that's basically you're signing on the bottom line saying, yes, we're going to have adverse impact. As far as the loan forgiveness, my understanding is how they're going to look at it is that you maintained your payroll spending and you maintain your headcount. Okay. So those are going to be the two things that really determine whether that loan's forgiven or not.
Okay. So just hypothetically though, like if we go and have a really strong quarter during this crisis and we prove that we maintained headcount and even grew headcount, that is still a forgiven loan?
The way that I understand it, yeah.
Okay.
Yeah.
Okay. So there's strong incentives for, really kind of everybody to apply. If you're
there's huge incentives. Yeah. The
forgiveness it's not predicated on your business not doing well. Obviously the intent is
right.
that we're trying to support small businesses, but Okay. So that wasn't, okay.
I mean, and I would say, honestly, we all have kind of an obligation to be good citizens in this thing too, because the pot's not unlimited. So there are a lot of businesses that are really hurting. And if you aren't one of those businesses, I'd give some real hard consideration to whether you apply for it or not if you're not impacted.
Mm-hmm. So that's an important point, though, that this is really about, that there is some element of like we're moving at a record speed to put this capital into the marketplace, but we're expecting people to come forward and be good citizens and not to sort of have a forecasted economic hardship. Otherwise, you're taking that money from other companies that actually need it in this moment. So, okay. And then houses of worship are also, I believe, have some inclusion and eligibility. Is that right?
I believe that's the case. Yeah.
Okay.
There's certain aspects to it. I'd have to get back to you, but I think there's a certain component that it has to have some kind of, I call it secular type business, but like a thrift store, counseling service or something like that. But we can get back to you on that for sure.
And then, okay, so let's transition. And again, we're seeing some questions come through, so I appreciate that. What about 1099 employees? So we've got a lot of folks that are in the gig economy that are working as freelancers. We employ a number of 1099 employees at Bunker Labs.
Sure.
A two-part question. One is, can you use the PPP as an organization to help cover the costs associated with 1099s? One question. Second question is, what can 1099 contractors do for themselves under this?
Right.
CARES Act?
So again, these are the initial reading of the rules that came out last night. But the way I understand it with 1099s from the standpoint of kind of the employer perspective is that you can use expenses associated to 1099s as you provide your overall payroll costs looking back. So when you're looking to determine what the size of the loan that you're eligible for, those 1099 contractor expenses can be included in that. However, on the front end or in the, looking forward, when you're looking to spend at least 75% of that loan on payroll, those 1099 expenses are not considered as part of the payroll considerations. So it's kind of a disconnect, but that's just my initial read of the rules. So, but I would say that notwithstanding, my understanding is that, and again, reading the rules, I'm not the total subject matter expert, but is that those, you still have that other 25% that you can use for other expenses like mortgage, lease, can also be used for 1099 contractors. Okay. So you can still, it's not an ineligible use of the proceeds to pay 1099s out of the loan that you get, but it's not considered as part of that 75% for the forgiveness component.
Okay.
Clear as mud, right?
No, I got it. Yeah. And again, I appreciate you coming on because there is still, we're still understanding this, and even the SBA is, trying to kind of put structure around some of the definitions. So, is in the case of back to the PPP.
Yep.
It's an interest-free loan on behalf of the SBA, but is the bank going to charge you fees, or what kind of hidden costs are there associated with this?
Yeah, there's really no costs. The banks actually receive compensation from the SBA for making the loan. Okay. It depends on the size of the loan, the percentage of the loan that the bank is paid, but they are paid origination fees, basically. If somebody uses a third party to help them prepare their application, that cannot come out of the proceeds of the loan. It cannot come out of the pocket of the applicant. Basically, the bank would have to pay them out of their origination fee that they receive from the SBA. So there's really no cost for the small business other than time, which we all know is important. But it's meant to be as I guess as inexpensive as possible. And as you mentioned, it's actually the loan rate is 1%. It's a 2-year term, but those payments are deferred for 6 months. Mm-hmm. I think with the vision that the loans, generally speaking, would be forgiven before that 6 months even hit. So there wouldn't even be any payments that would ever be made against the loan. But if you didn't have the full loan forgiveness, then you'd know that you have this 1% loan at whatever rate, and then you would likely have to either pay it off at some point over the subsequent 2 years or refinance at the end of that 2 years.
Got it. Okay. Which is still, I mean, cheap money, even if it is a loan that you're paying back. Okay.
Right.
Okay. So we talked about 1099s. We talked about the definition of small business. Let's talk about sole proprietor companies, S corps. Here's a question here. Being an S corp who doesn't run payroll, it's just my wife and I who have lost contracts because of the virus, canceled retainers, postponements, et cetera. This is true for a lot of consultants or services industry,
right?
Folks, professional services. How would someone like me get help? Which program is best?
Yeah. So again, what I would say is that, usually with my understanding, right, I'm not the accounting expert on this either, but as an S corp, basically everything that you make from your business basically flows through your through Schedule A to your personal income tax return and is considered income. So I believe that would be
wages. I mean, that's sort of
that's like your payroll.
Yeah, it's your payroll.
Right. And then, obviously if you made more than $100,000, you'd have to kind of subtract out anything above $100,000 for the purposes of the loan amount. But that's generally speaking how, you would apply it. So that's my understanding right now.
Okay. I've got this is on the fact sheet that's included in the Bunker Labs resource hub, but we have some, to your point, Bo, what costs are not eligible for payroll, and part of that is employee or owner compensation over $100,000. But yeah, owners can apply for PPP forgivable loans and include themselves on that, including for S corps. But it's not going to include it won't be for compensation beyond $100,000.
Right.
And then compensation of employees whose principal place of residence is outside of the United States are also not eligible. And then allowable uses of the loan proceeds are things like payroll, costs related to continuation of group healthcare benefits, sick leave, salaries, commissions, or other compensations, payment of interest on mortgage obligation, rent, utilities, and then a few other small categories.
Right.
I think you talked about the loan term, the interest rate and fees. Let me read you a statement. Tell me if this is true or give us some amplifying color on this. But for any amounts not forgiven, the maximum term is 10 years. The maximum interest rate is 4%, 0 loan fees, 0 prepayment fee. And then it says the SBA will establish application fee caps for lenders that charge. So is that, yeah.
So they've actually, from the legislation to the actual rule implementation, they changed the maximum term from 10 years to 2 years. And they changed the interest rate from max of 4%, they lowered it down to 1%. Other than that, I think everything that you've mentioned is accurate.
Okay. What do you forecast? So let's maybe move off the, I feel like I've had you in the hot seat because there's just a lot of specific and technical questions that I know people are asking. What is the SBA's kind of capacity to process all this stuff at once? Is that a concern? I think people are kind of chasing down their business bankers now. Is really the demand side is really going to be with the business bankers and the community banks, or what do you, from an operational standpoint, what do you expect is kind of the timing for all this, or what delays should people expect?
So my understanding, again, we haven't gotten like firm turnaround from the standpoint of the PPP program, but my understanding is that it's basically the SBA should be turning around the loan processing in a day or two. As far as, you know, the lender submits the paperwork or the documentation. It's electronic. It's all electronic. It's not like actual, you know, UPS going someplace. And then we'll make a decision quickly, and then they'll disperse. The bank will disperse based on their normal closing terms, whatever timeline that would be. So frankly, it shouldn't be very long. Internal to SBA, we've basically, just because of the pure demand, we have worked with a bunch of, you know, big technology companies to totally revamp our technology systems. So we're leaning heavily on technology to process these loans and to make sure that, you know, we're doing our due diligence, but at the same time, we're able to manage the overall volume that we're getting.
And the total loan set aside is like 349 billion, or is that just for the PPP, or does that also cover the EIDL?
So my understanding, so 349 billion, I'm sorry, with a B, is the PPP. The EIDL is set. I want to say, I don't want to give you a bad number, but it's at least 7 billion, but I think it's more than that. And then there's a whole nother, that loan forgiveness for the 7A is a huge number too. So I think all in, it's like 600 and something billion dollars for small business.
Yeah, which is, I mean, historic investment. So we had a question come through. I'm going to open up some questions, and then we'll honor the time constraints that I know you're under, Bo. But can employers still qualify for the PPP if they have had to lay off? And can they rehire those they have laid off once they receive the PPP? Because that's a great question, because we're sort of sitting here holding the bag, wondering, is the money going to come in? I can't afford to pay it if it doesn't.
Right.
Is there sort of a forgiveness, or what are the conditions around that?
So there is some language, I can't find it right this second, but there is some language about either keeping people on payroll and or quickly rehiring people. So I don't have the language right in front of me on the document, but there is some caveat in there that quickly rehiring would be considered, you know, compliance with the program.
Okay. And is the money going to be allocated on a first come, first serve basis? So there's some anxiety about, you know, what about if the money runs out? How is the SBA thinking about that?
Yeah, so it's definitely first come, first serve. So it's basically, you know, you want to get moving as quickly as possible, I think, to take advantage of the program if it's appropriate, because there's a ton of interest, as you can imagine. So yeah, it's first come, first serve for all of the programs that we have right now.
Okay. If folks have already taken on debt, maybe just prior to the crisis, can this be used to refinance the debt, or is it, I guess, how do you think about existing debt obligations? So someone that maybe before this package became available took out money to try to maintain payroll, can they just take the PPP to pay off those debts, or how do we think about that? Is that a commingling, or that's
so typically, at least in my reading of the PPP, and again, all this stuff's being refined, but I don't believe that you can refi any debt except for maybe an economic injury disaster loan or an SBA Express Bridge loan. Those are two cases that I believe you can, but otherwise I think there may be some risk in there, but I would definitely talk to the lender about that and get their perspective. I know it's similar in the economic injury disaster loan program as well, where, You, again, there are some circumstances where you can refi debt. So maybe you just loaded up your credit card and you can prove, hey, this is why I had to load up my credit card because of these working capital type expenses. That may be acceptable through the loan process, but that's going to be something that you want to talk to your servicing agent on to make sure that that kind of repayment of debt would be satisfactory.
Okay. And I think you said this before, but there's like a national network of, I think, 1,800 banks that are SBA lenders that partner with the SBA and make SBA-backed loans all year. And that's the network through whom the SBA will make these, the PPP available. That's right. Is it just banks, or are there other kinds of institutions?
So the SBA lenders were automatically certified to make these loans. However, other financial institutions, both depository and non-depository, are eligible to participate. They just have to apply, and they have to meet certain criteria, like lending criteria, lending experience criteria. But it's going to be much broader, I think, than just the SBA lending community.
Okay. Can you just talk for a second, and then I know we're hitting our time, but can you talk about some of the other services that the SBA has available? So I'm interested in, maybe you can just give us an overview of like the SBDCs, the VBOX, some of the other district offices. Are they open? How are they serving clients? And then the second part of that question is going to be, what's specific to the startup community, the entrepreneur community, those that are, maybe pre-revenue or thinking about starting a business,
right?
What would they amidst this environment?
Wait, can you say the last part of that question again?
What's the SBA's kind of perspective on folks that are trying to start businesses in this environment? It's a tough time to start business, obviously, but we're gonna want that. I mean, historically, the SBA has been a champion for entrepreneurs as well. So first part is just talk to us about other SBA services besides the PPP loan package, and then what is there for entrepreneurs that are wanting to start a business either now or coming out of this recovery?
Right. No, thank you for that. So we have SBA funds a network of partners to provide a zero cost business counseling and advising services across the country. They are open for business. So whether it's the Small Business Development Center, which employs business advisors to help small businesses start, grow, and their business, to SCORE, which is all volunteer, women's business centers, the veteran business outreach centers, all of them are not only helping businesses navigate these resources that are available, the PPP, the economic injury disaster loan, but they're also there to help them figure out, okay, how do I get through the next 2 weeks? How do I strategize to get through the next 2 months? How do I develop my long-term strategy to be viable given kind of the new normal that we're experiencing right now? So a great network of resources, and you can find them on SBA's website at our local assistance tab. As far as small business owners, I mean, right now, if you've got an idea and you're thinking through it, again, these are great people to go to because in the case of SCORE, they've been there, done that. They've been in the business world. They can give good advice on, like, hey, maybe these are some of the things you need to think about. Or if you're trying to build that business plan, SBDCs are great at helping to strategize around different aspects of it. So, really, and the other piece I would say is that there's lots of other resources out there as well outside of SBA resources. And these folks know what those resources are and can connect that business owner into those other options. So just really recommend that you connect with them. We all know that having a network of advisors and people that you can count on to help you navigate these difficult times is important. And these are a great resource. They're with you as long as you want them to be. And again, they're no cost to you. They're being paid by the government and other organizations to ensure that you get the resources and the knowledge and the tools that you.
Great. Thanks, Bo. Yeah, I just want to underscore that Bunker Labs is here as a resource for you. Go to bunkerlabs.org/all All In, and that's our campaign in response to COVID-19. And there's a lot of resources there that we are adding to every single day. Liz Marion curates that, the Facebook group. So we have live advisors that can help you there. We'll add links to the SBA Small Business Development Centers. The Veteran Business Outreach Centers is a specific SBA initiative to support veteran business owners. So that's relevant to the Bunker Labs community. Get with your local business banker. If you haven't had a business banker historically, this is probably a good reason to reach out and find one. We talk a lot at the Bunker about building your squad. You don't have to be an expert at all things, but when things are hard, you need your accountant, you need an attorney, you need your real estate professional, you need your commercial banker who can help you navigate this. And there's Wintrust and JP Morgan Chase and a lot of great banks that are available as resources locally in Chicago and then nationally. USAA is doing a lot in this moment. So again, there's a lot of resources out there, but we're here to help you get smart together. So Bo, I appreciate you taking time out. We'd love to have you back as we continue to kind of get clarity on the loan forgiveness process and things like that. We'd love to, have you back on.
Yeah, anytime. I love it. Thank you.
Thanks, Bo. Go Navy. Liz, I'll turn it back over to you. Thanks for getting us going.
Well, thank you both for that conversation. That was so just the information and the resources that are available. You can check out all the links in the comments below this video. And if you need any resources or can't find them, if they're lost in the feed, please let us know, message me directly, and I will share them with you. We will have more town halls to equip you through this process next week. But Bo and Todd, thank you so much.
Thanks, Liz. I want to give one plug. Next Friday, we're going to have Doug McCormick on, who is a private equity guy, West Point grad. He's based in Washington, D.C. He's also our board chair, and he's the author of a few books on personal finance. So he's going to talk about liquidity in this moment and how should you be thinking about cash flow management, because that's ultimately what we know small business owners are struggling with. It's just about how do you survive this episode? How long is the episode? And then, how do we survive on the other side of it? So he'll have some strategies and a perspective on that next week. So lots of good content coming to you through the online community. So
Absolutely.
Thanks, Liz.
And I guess I should mention before we get off of here that we are also going to have an Inspire piece. So Thursday and Friday, just like this week, town halls. Thursday will be our Inspire piece with Ryan Harris, former Denver Broncos player, who is a public speaker and going to be talking about getting his business through tough times as well and how to apply mindset and principles to that. But we'll see you guys next week. Thanks so much.
Awesome. Thanks, Liz.
Thank you.